Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, and amazing people all around the world of crypto and blockchain. And today I have another amazing guest. I'm looking forward to this interview, and let's kick things off. Today's guest is Dr. Cap. He is a lead advisor at BasicSwapDex. Dr. Cap, welcome to the show.
Hey, how's it going?
Good. Thank you so much for joining me today. I look forward to this conversation.
No worries.
Awesome. So let's kick things off. I'll ask you first. Ask everybody the same question. I get amazing answers. Is what is your background, and is it a logical background for what you're doing now?
Yeah, so I got into I was watching Bitcoin back in sort of 2011 to 2013. Never bought in. I was just watching it. I think I kind of could see the direction it was heading in, but I was just put off by all the different wallets and yada yada. Anyway, a couple of years passed, and then I came across Ethereum, and I'd seen what happened with Bitcoin. So I thought, okay, let's just go in. Let's go all in. I thought smart contracts, creates convenience, has an intrinsic obvious value that I could see. I could see the point of smart contracts as a concept. So I took a speculative bet on Ethereum, which paid off. But that kind of got me into the long road down cryptocurrency and self-sovereignty and exploring personal finance, privacy, really understanding how our monetary system works and how our financial architecture works. So over the last 8 years, it's basically been my hobby. Some would say my obsession. But when I did get into Ethereum in 2016, I came across another project, which was called the Particle Project. And they were the parent project to BasicSwapDex, which is one of their products. And I started off as a community member. They're focused on deploying privacy-focused apps. I'm really into, I'm a big fan of privacy. And this is one of their flagship apps. So yeah.
Awesome. Their privacy seems to be a big deal at the moment. We'll get into that, right? So I want to find out, BasicSwapDex, what it's all about, your vision, your mission as an advisor. What are you helping them to achieve in their goals and mission as well?
Sure. So I act in the capacity of a strategic advisor. So it's tricky. I think there's a lot of stuff that I do in terms of front-facing work where I'll talk and present our work at conferences, at podcasts, much like this one. We kind of do our weekly strategy meetings where we kind of look at the various technical updates and all the business development stuff, and I'll kind of put my piece in as to where I think we should be focusing on, what sort of directions we should be headed, how we should be sort of expanding our reach. I do work in terms of partnerships, bringing people together. There's lots of little things that I'm actually involved in, but I'm quite a prominent face within the Particle community and the BasicSwap community by extension. So yeah, lots of things.
Awesome. So I want to find out, you have, as far as Particle's concerned, as far as BasicSwap concerned, you have a new atomic swap technology, right? So I want to find out how that works and how that's an improvement in both DeFi and in privacy.
Sure. So I'll just say it right now. BasicSwapDex is the world's most private, decentralized, and secure non-custodial decentralized exchange. We have been world innovators. So we've been at the cutting edge of innovation in atomic swap technology. Do you guys know much about atomic swaps? Should I go into that in depth? Or...
Yeah, actually, it's only something that I've ever heard of. So yeah, if you can go into it, how it works, that'd be great. Yeah,
so if you look at a lot of the traditional dexes, they're kind of like liquidity pools. And you kind of, I'll just explain what an atomic swap is. So you basically line up two blockchains, say Bitcoin and Litecoin, and you basically, between them, you create a conditional contract that has a shared secret. And that shared secret, it basically goes, if I send Bitcoin from address A to address B, then you will send Litecoin from address C to address D. That is a set of instructions. It's like a template of instructions. And because there's a shared secret, as soon as I send Bitcoin from address A to address B, it exposes my half of the secret, which then allows the other party to then kind of, I guess, basically it allows the whole process to proceed. So yeah, does that make sense? I feel like I'm botching this a bit here.
No, it does. And it's all private. It's all private. So no one else
It's all private. Yeah, yeah. So it's between. There's no third parties. It's just straight between two blockchains. It is a swap of two assets essentially. So you just create a conditional contract and it executes and it has a shared secret. So it is a really nice from a privacy point of view, from a non-custodian point of view, because you retain full control of your funds. You're not kind of giving them over to a centralized third party. It's a straight swap at an agreed rate. So it's not like with liquidity pools where you kind of average out the prices. With this, it's like I am sending instructions for this much Bitcoin to be exchanged for this much Litecoin. And that is what happens. It's no more, no less. So you pretty much guarantee what you get, basically. And it's extremely secure because it's occurring at the level of the blockchain. So it's a case of, well, the swap will either go through or both parties will get their amounts refunded to them. So it is very much either it goes through or the parties get their funds back. So there's a lot of benefits to atomic swaps. Where we're different and where we lead is a lot of the traditional atomic swaps. There are lots of atomic swap dexes around, but where we've innovated is that traditional types of atomic swaps, HTLC, they require both coins to have programmable inputs. So it's kind of like the Bitcoin needs to be scriptable, the Litecoin needs to be scriptable in order to create this kind of shared script and this shared sequence of events. But what this created a limitation for was, coins that lacked programmable inputs, they couldn't participate in atomic swaps. So this in particular affected a lot of pure privacy coins like Monero or sort of Mimblewimble coins like Beam or Litecoin MWeb, for example. We created a new method of, well, we basically deployed a different method of atomic swaps called adapter signatures, and that's kind of back-ended to our underlying architecture called the SMSG protocol, a messaging layer. And basically it means you can do atomic swaps for coins that you couldn't do atomic swaps for. So now you can do atomic swaps for Monero, Litecoin, MWeb, Zcash, but various other coins that would lack programmable inputs. That's kind of one of the big things we innovated. And we were basically the very first atomic swap DEX to deploy sort of live bidirectional Monero atomic swaps. I think when Litecoin gets a certain update to its core, we'll be able to implement Litecoin MWeb atomic swaps. And actually, we're also leading the way in terms of mobile implementation of atomic swaps. So we're basically developing with atomic swaps. One of the things you kind of need to be aware of is because these are swaps occurring at the level of blockchains, you basically, in order to participate in atomic swaps, traditionally, you'd have to download and sync the blockchains for the coins that you'd want to swap. And you'd need to kind of leave those nodes running 24/7 so that they could exchange messages. So this wasn't really great if you kind of wanted to, you couldn't really run that off a mobile phone, for example. But we've kind of figured out how to make atomic swaps work on mobile devices.
So you mentioned Bitcoin, Litecoin, Monero, Zcash, I'm sure it's Dash, right? Proof of work coin. Say you wanted to trade from, say, Litecoin to Ethereum. You couldn't do that before, right? But now you can.
So with the atomic swaps, you still can't do the Ethereum. So they use two different architectures. The Ethereum and Solana, they use account-based architectures. Our DEX is designed for coins that predominantly support UTXO type architectures. So things that are more traditionally based around Bitcoin. So if you kind of look at what we support, it's Bitcoin, Bitcoin Cash, Dogecoin, Monero, Wowonero, Dash, as you mentioned, Litecoin. We will support Litecoin MWeb swaps as well. We are looking to develop Zcash atomic swaps. Actually, there's work underway in the background on that. There's actually quite a few other ones that I'm not, Decred, PivX, Theros. There's this whole list of coins that we do support, but for various reasons, Ethereum and Solana, we currently don't. That will require further research.
Okay, I thought so. So, I always said there's no way to do it, but some people do it, but you have to go through an intermediary to get there.
Yeah.
So it's not direct. So let's talk about security, and the trading of it. Right? Why is it critical to be able to trade, securely without relying on that central company I just mentioned, like a Coinbase or somebody, or in my case, 3 years ago, Celsius, as a central point of failure. Why is that critical now?
I mean, yeah, yeah, you mentioned it, Celsius, the problem with cryptocurrency is well, not the problem with cryptocurrency. Cryptocurrency came about as a response to the 0708 financial crisis. And it came out as a response to problems identified with the banking system, which is specifically if you have, let's say, hypothetically, $1 million worth of cash under your mattress, well, how do you manage the storage, transportation, and security around that? Well, traditionally, you kind of hand it over to a bank and then say, hey, can you take care of the security and kind of give us services to make transacting with this more convenient? But that came at a price because you were no longer in direct ownership of that money. You basically handed it over to third party. Now, that third party, you are trusting that they are not going to get hacked or robbed, or that you're trusting, that they're not going to suddenly have a bunch of arbitrary rules that say you can't do this, that, X, Y, Z with your money. Even if those transactions are completely legal, banks have lots of arbitrary rules that dictate who you cannot transact with and how much you cannot transact. So, you are handing over control with traditional systems, and this applies to a lot of centralized exchanges as well. Whereas with decentralized exchanges, much like BasicSwap, you don't hand your funds over to a third party. Therefore, you retain full control of your funds. Therefore, you don't have that risk that your funds are going to get frozen. You always have full control over who you send and trade to and with and how much. Because you're not handing your funds over to a third party, there's no requirement to give up any personal information. So when you use, a decentralized exchange like BasicSwap, there is no one asking you for your name, date of birth, what school you went to, your address, your employment history, yada yada. So there is no risk that you've A, handed that information to a trusted third party, and B, that's going to then, you don't have to worry about that getting stolen because you've never handed it over, you've never given it up. So you retain full control over a lot of information, and this gives you a lot of power.
Yeah, I know. So financial privacy matters most now. Like, it's always been an issue. It's always been a desirable state. Like Litecoin's created MWeb to have that privacy. But as a market downturn recently, Zcash has been going up, right? So it seems to me that financial privacy is now more important than it's ever been. So why is that now, and how can that privacy be, preserved when you're trading, or that when you're, I guess, when you're doing 100x, or not? How do you preserve that privacy, and why is it important now?
I think so. On a really fundamental level, the most secure thought is a private thought. So the thoughts in my head are highly secure. That gives me the option to think freely. If I'm in a room with just you and me and no one else, we're happy that no one else is listening in, then provided we get on really well, we can just share whatever thoughts we have. We have that freedom of information, that freedom of exchange, that free flow of thought. And you need that free flow of thought to have diversity of ideas. So on a very fundamental level, I think privacy is just important to promoting free speech and to promoting a culture where people can think outside the box, which in turn helps create resilient societies that are immune to black swan events that we face all the time. So that's on a very fundamental level. On a very practical level, privacy is important because you have all these public blockchains where you can get third parties that can tell you exactly where funds are going to and from. Well, if you happen to run a sensitive multinational corporation with a ton of supply chains, I don't think you'd be that comfortable, with with the thought that your competitors can see exactly who your supply chains are. If you're doing sensitive R&D, I don't think I'd be comfortable using transaction services where my competitors can see exactly where I'm getting my parts from, who I'm trading with. If I was a simple employee, I wouldn't necessarily want a third party to just be able to see my paycheck within, a split second by going to a website and just going, hey, that's his address. So on a very practical level, there are lots of reasons to have privacy. And I think the surge of interest in privacy coins, or certainly I hope the surge of interest in privacy coins, is the recognition that in order to have practical real world usage of blockchains on an industrial, commercial, and societal level, we need to have basic elements of privacy built into them to protect the end users.
I want to follow up on that sensitivity issue. You aren't going to use blockchains for supply chain like details, are you?
Sorry?
You're not going to use blockchains to record supply chain details, would you? How would that? Like I noticed.
You can actually track the history. So there are various projects that have if you look historically, there are projects that have kind of looked, okay, this shows and proves the point of origin of this set of goods. So you can do blockchain tracking technology to prove the origin and source and transition points of goods. I guess why I'm talking about supply chains is I'm very much looking to the future, where I see a world where global e-commerce and global transaction of real world goods and services is done on blockchain networks. Now, BasicSwapDex, I've kind of talked, it's a very good service for swapping crypto assets privately in a non-custodial fashion. As I said, the parent project for us was the Particle project, which was essentially an implementation of a decentralized peer-to-peer e-commerce platform that allowed you to create as many marketplaces as you wanted, and they all had their own individual keys. So in theory, one of the thoughts, it didn't take off, and that's a very separate topic in its own right. But one of the things I can foresee is you will see the emergence of applications which will allow companies and individuals to effectively almost automatically administer their own supply chains with a higher level of privacy, with a higher level of security, with a higher level of resilience against third-party spying. So I think this doesn't just apply to just the trading of assets in the sense of swapping cryptocurrencies. I think this applies to the exchange of real-world goods via using cryptocurrencies as a currency. So that's what I'm getting at there.
I never thought of it that way. I thought, okay, privacy between just trading coins. I never thought you have decentralized marketplaces where you have privacy. Well, that opens up a world of a lot of things, doesn't it?
Yeah. So yeah, like I said, it's for me, it's very easy to see the future because kind of a lot of the work that we've done is almost a couple of steps ahead, and now we're taking a step back with this. I think not a step back, it's a step on the way towards making privacy, I guess, more mainstream, making it just much easier to access, normalizing the idea of non-custodianship. So I think a lot of ordinary people, it's this idea of you control your own funds, you are in charge of your own security, you now manage all the millions of dollars under your mattress. I think that's quite a daunting aspect to a lot of people because of traditionally with the cash-based fiat economy, well, that's not a straightforward thing to do, even if you use gold, heavy blocks, as it were, that you'd have to store and transport, etc. Whereas cryptocurrencies, they don't have weight, they don't have the traditional kind of storage or transportation costs associated with them, which is in part why Bitcoin took off. It's digital gold in that premise. But kind of, it's this idea that to kind of get to where we are now, we've had to use a lot of the traditional type of centralized architecture to kind of normalize the idea that cryptocurrencies are a thing, that they do have value, that there is something to them. And that acts as a gateway to ordinary people or a portion of people to then explore what that is and go, oh, actually, I do get it. And this is very much what happened to me on my journey, which is, 2016. Oh, yeah, smart contracts, Ethereum, that sounds really cool. I can see how that works. But then as you go down that rabbit hole, you kind of go, now I understand, if as we live in a world which certainly in the UK, I don't know if you follow our events, at times it feels increasingly authoritarian, and it feels like we live in an increasingly controlled and surveilled society. Being able to claw back that power, as it were, by using the technologies available to us, I think, that is something that will have increasing appeal to more and more people, especially as more and more people become the victims of abuse of power. So that's an aside, but we work on massive trust assumptions with centralized services that the owning parties will not abuse or misuse their power. But time and time again, historically, that's not the case. So actually, I think things like BasicSwapDex, by like deploying that mobile swap service, which will basically run a bit like Changelly, except the underlying architecture is just decentralized and it's non-custodian. So you're not actually handing, unlike with the traditional swap service providers, you don't hand your funds over to a third party. So again, no risk of it getting frozen, no need for KYC. You can utilize swaps for privacy coins directly. And actually the nice thing with the mobile swap service is you won't have to download and sync tons of blockchains on your phone, and you won't need to keep the application running just because of the technical advances we've managed to pull off with our implementation of atomic swaps in conjunction with our underlying architecture. So I am looking ahead and just seeing privacy becoming increasingly more and more mainstream. And I see a lot of what the work that we're doing now with atomic swap technology for decentralized exchanges as being a bridge and a gateway to later implementation of e-commerce services.
While you were explaining that, I could see 3 steps ahead. And I'm like, now that makes sense. Being able to trade crypto, just from the privacy perspective, didn't make too much sense. Now, having marketplaces, having economies, having whole entire, I was going to ask you, how privacy focused cross chain swaps would prevent that $18 billion drawdown we saw a week and a half ago, but it's going to prevent a lot more than that. It's going to prevent authoritarian regimes from taking over, right?
Yes.
Interesting. Wow. Okay, so let's tie these together. Let's use Bitcoin, Litecoin, Zcash, and Dash, those 4, and say, okay, what are the best uses of those 4 in this decentralized, infrastructure, e-commerce platform going forward? How could they be interoperable with one another? What would be the best use cases for each of those 4 in that dynamic that you just described?
Yeah, so looking at, I'd say Bitcoin is the highest value asset. It's the highest value asset, but it does historically have higher transaction fees. So it moves slower. So it behaves like it behaves like gold in a very traditional sense. So it is increasingly becoming a sovereign reserve asset in terms of perception and reality. I think Litecoin, particularly Litecoin with MWeb, I think Litecoin, they historically pitched themselves as the silver to Bitcoin's gold. I think that is a valid comparison. I think Litecoin with MWeb has lots of privacy features built into it. So certainly if you are looking to run sort of more and more everyday uses, particularly with regards to e-commerce or just traditional running of businesses, etc., I think, Litecoin MWeb, that's a very good currency to transact with. Again, Dash has instant finality. So again, that is very much point of service, maximal convenience, essentially, maximum speed. And sorry, what was the 4th one you mentioned? You mentioned Dash and Zcash. I mean, again, I feel like Zcash, it is a highly scalable, highly private cryptocurrency. Zero knowledge proofs are offering a very, very, very high level of privacy. And I think, in that sense, certainly if you want a premier privacy option, I would certainly consider utilizing zero knowledge proof type technologies as well. So yeah, Zcash from that end, yeah.
Got it. So I was wondering when privacy is going to stop being a topic of concern by the regulators, but now knowing all this, should be a higher of concern. How do we circumvent the regulators from being involved, or do we want them involved? Is there a common like way point of let's say cooperation? Is the word between regulators?
No. It's really interesting. So at the Litecoin Summit in 2023 or 24, I can't remember now. Yeah, 24. There was a really interesting talk by the father of PGP privacy, so pretty good privacy. He invented this protocol that basically allowed for end-to-end encryption of email. And basically, the story he said was that he developed the protocol, deployed it, and it had been used by so many different corporations, and its usage was so widespread and ubiquitous, it was just in use everywhere, that by the point that governments were aware of it and able to raise objections, the entire private sector just basically said, no, we are keeping this. We are not letting go of this. So I think a big part of the solution is developing and deploying technologies that are sufficiently easy to use to make privacy an everyday convenience. That's just there. Like, turning on the tap when you go to get some water, a glass of water. That's how you should aim to deploy the technologies of privacy. And I do think regulators need to understand that in a world filled with various geopolitical factions and tensions, you cannot seriously expect to maintain a secure security apparatus for your state or for your entity if you just do not have privacy of communications, if you don't have genuine privacy communications without backdoors. So a lot of the regulators, they're like, oh yeah, you can have your end-to-end encrypted privacy as long as there's a backdoor, but that's pointless because backdoors always get discovered, they always get exploited eventually. So I think there needs to be a real understanding by regulators and politicians and decision makers that actually there is, privacy, that there's no question about not having privacy. That should be the default. So yeah.
Interesting. So it goes back, I guess, to what you said about Black Swan events. I had a conversation my last season with somebody who said Bitcoin is resilient to any Black Swan events. So I'm looking at these other privacy coins, Litecoin, for example. How is that also, resilient to any Black Swan events? And if not, then when do you think it will be?
I think Litecoin utilizes a script proof of work algorithm. It has a very nice, it utilizes a proof of work algorithm, and it's been live almost as long as Bitcoin has without any downtime. So I think it's fair to say that it's demonstrated its resilience up to now. There's not been that many major changes to that protocol. I think Litecoin is a highly resilient piece of technology. So I don't worry about it personally.
Yeah, I don't worry about it either. I just worry about I think I think it should be used more often. So
yeah. Yeah, it's an interesting point because actually there are a number of there are smaller proof of work coins that have, had their 51% attacks, but I think Litecoin has probably passed that threshold in terms of network effects, adoption, and just sheer scale of mining operations, that it has that inbuilt resilience. So like I said, I don't worry about it too much.
Do you worry about Monero? I saw a month ago or so too ago there was a 51% attack attempt. So what's the future of Monero? How do you see that?
So I think with Monero, I think they'll do well. So there were reorgs on it, which was to create, say, the minimum a nuisance. And they have died down because the secondary mechanism that was triggering those wasn't sustainable. I think the Monero community at the minute is going through a period. If you look at what happened in response to that, there was a lot of reflection within the Monero community as to how do we prevent this from happening in the future. And there was a lot of internal debate. And I think this is healthy. With regards to Monero's technology, they are going to be deploying something called full chain membership proofs, which will give it a level of privacy that is comparable to Zcash. So it will give it a level that is on par with Zcash. I think it's reasonable at this point to say, that the Monero gives excellent privacy, by the way. It gives very, very good privacy. But I think it is interesting in that you're right that we have to look at the consensus protocol for it is going to need to do a little bit of work moving forward, and it will get there.
I'm confident it'll get there. So we have this whole entire. I'm excited about how you're looking ahead. These 2-3 steps. So what's your vision of how this next cycle is going to play out? And by the end of this bull cycle, which people say are over now, it's not. What'll be your outlook for the net for going forward these next several years into the next couple of cycles?
So I think it's been really validating this cycle, as in terms of, if I'll go back to Ethereum. So if you look at the narrative around Ethereum, it's all been around tokenization of real world assets. It's been around this idea that all of the existing financial architecture and technology, all those backends that used to be highly centralized and dependent on multiple chains of humans and prone to human error, all of that, it's the idea that all that backend technology will get replaced by some sort of distributed ledger technology. So some kind of blockchain or family of blockchains will essentially take over. So I think if you are getting into financial technology at this point, this is kind of a golden era, the next 10 years. And I think it is unbelievably bullish if you take a 10-year view for cryptocurrencies as a technology and as a financial, as a money, as a type of money. If you look, you can go to my personal Twitter, and it's called, and it's at that, that's at the greatest stock, and pinned to that is an essay I wrote called Particle: The Road to Hard Money. And it's basically an exploration of this idea that you can either have soft money types, i.e. they're perpetually inflationary, or you can have hard money types, i.e. at some point they become net zero in terms of they stop having any overall total issuance, or they even become deflationary. And I think a lot of what we're seeing with the rise of cryptocurrencies now is it goes back to that 07-08 response to the financial crisis. People want to see hard money. And the reason for this is simple. I can talk to you about like the last 10 years of my fiat savings account following the 07-08 crisis, which was, inflation was around 2%. The interest on my savings account was 1%. So actually, the real-term spending power of my savings was falling. And that didn't just affect me, that affected every regular person that had a job. Most people who work for a living, if they aren't living paycheck to paycheck, they're usually holding their money in savings in a bank account. And this money being held in savings in a bank account is subject to perpetual devaluation in spending power year on year in a compounding fashion. So a lot of the economic and social instability we're seeing now, it's simply the latest stage compounding effect of this. It's like a really interesting calculator to look at is the USD inflation calculator, because it just shows you the extent of devaluation. An item that would cost $1 in the year 2000 would cost $1.85 today. 25% of inflation of devaluation in the US dollar has occurred within the last 5 years. that dollar, an item that cost $1 5 years ago would cost $1.25 today. So people who have their money in traditional fiat savings, they're losing value. In contrast, if you happen to have your, at least some of your assets held into like a hard money type like Bitcoin, you've just seen exponential growth. And you can do that for the S&P 500. If it's in an index fund, you can do that for gold. You can do that for a variety of assets, but hard money and gold. Gold has outperformed fiat, and Bitcoin has massively outperformed fiat, and cryptocurrency on the whole has massively outperformed fiat, and it will continue to do so. And I think it's going to be interesting because it does create a weird sense of, the beneficiaries of this, the early adopters, they're the biggest beneficiaries of this. But as the gap between those early adopters and everyone else keeps widening, everyone else is going to look and go, hang on, the monetary system we have at the minute that we've been reliant on for 15, 20, whatever years is useless. Let's go to this. So I think there are lots of reasons to be optimistic.
I agree. I am. So, awesome. So I want to thank you very much for speaking with me today. I enjoyed speaking with you. I enjoyed the conversation immensely, and I look forward to seeing all the great things that BasicSwapDex is up to and continue to be up to. And I have one last question, and it's how can people find out more information about you and about BasicSwapDex, and how can they start using it?
So you can go to BasicSwapDex.com. That's the website, and you can actually download and install BasicSwapDex on your desktop. The mobile versions we expect the mobile swap service should be delivered to several wallets, including the Litecoin Nexus wallet in hopefully Q1 of 2026. Twitter handle, BasicSwapDex. If you want to follow me, the greatest stock. Yeah.
Awesome. Thank you very much for your time today.
All right. Thanks. Thanks, Jermaine.